Quest, we reached out to a couple of people. We wanted to find an expert in this area. So before we start talking about some of that, I wanted to really touch base again, always just give people a chance to kind of log in and see what's going on why Quest hosts these classes, what a self-directed IRA is, and how we can use it for some of the up and coming investments that you see. So once again, thank you so much for joining us. If you do have questions, please put them right there in the chat box. The speaker, myself, and the moderator, we're all going to be here to help answer those. In addition, you can pitch your own investments right down there in the chat box as well. Always do your own due diligence. So I always like to start off with who is Quest, right? We are the largest self-directed IRA provider in the state of Texas. We're trying to shoot for the US, so we're getting there, okay? We have a little over 20,000 active investors that work with us on a consistent basis, $2 billion in assets under management. Ooh, look at that. A little over 100 employees. And what's unique about these employees is 34 of them are certified IRA service professionals. Now, if you don't know what that means, we have to get a special certification from the American Banking Association that pretty much states that we're a nerd. We sit down and read IRS tax code and how it relates to your retirement account so you can do some of the investments like Airbnb things, all right? We have a little about $350 million in undirected cash at any point in time. As we say all this, always remember that we're only here for education purposes. We don't endorse anyone. We can't sell you an investment, and that's the purpose of a self-directed IRA. So make sure you're always doing your own due diligence. This literally leads into some of the big benefits of using a self-directed IRA, like diversification, right? We always want to diversify our portfolio. We don't want everything sitting in stocks and bonds. I say take a portion and put it to real estate or small business or something along those lines. You know, that way we have some real, true diversification. The biggest reason people want to use a self-directed IRA, though, is really the tax savings. Remember, you are a taxpayer. Your LLCs, your trusts, your C Corps, all of these, when they make money, have to pay taxes. But when your IRA does these exact same investments, then none of the profit today is taxable. So this is a huge, huge advantage. Lastly, don't forget about the social investing aspect and investing in what you know best. Knowing I can use my IRA to invest into my community. This allows me to understand and see the social impact of what I'm doing. It allows me to be able to touch, feel, see the assets, meaning I can truly invest in what I know best, right? Outside of stock markets that can be manipulated at any point in time and you have zero control. So we always like to host these things from an endless free education standpoint. So we have a lot of educational events that are coming up, right? Things always from our weekly webinars to our YouTube channel, our virtual happy hours that are on the first and third Wednesday of every month. This means tomorrow night, we have a virtual webinar going on where you can come in, you get to pitch your own deals, listen to other deals that are going on. And we always tell people, bring a drink, you know? So I'm a big beer guy. You'll see me on there tomorrow night with an ice cold beer in my hand so we can talk about investments and you have a chance to pitch your own deals there. So this is a really, really unique opportunity for people to kind of come into play. Don't forget about our self-directed Saturdays. Every Saturday at noon, we host a big event where you can come in, not only pitch your own deals again in the chat box, but listen to a truly highly educated speaker in a very specific area. So how do you get in touch with one of us, right? You can always use our chat box right on our website where you get to speak with a live IRA specialist at any point in time. Give us a call at a non-automated line or even send us an email. So let us know what we can do for you guys ultimately to get started. Now, that's the short, brief Quest portion. I actually got chosen to do the introduction for our speaker coming up. And what's unique about it is we've worked with this speaker for several years. So she's been located here in Houston for a little over 25 years, been dealing in real estate for around 6. Now, what's funny is I always think this is unique because no matter when you get started in real estate, that's not where you end up. And so she got started in the fix and flip aspect and really understood that, fix and flipping became more of a job. So she was looking for something different. She's worked so much with private lenders, raising capital, and doing so many different unique real estate deals. So we wanted to bring her in because she's been focusing a lot on Airbnbs lately. So V, are you with me?
Yes, I'm here, Derek.
Awesome. So V, I'm going to let you take it away. You have full control. I'm still here to answer any questions stuff. My screen's just going to be off. Okay. So thank you for joining us today.
Hey, thank you. You guys are amazing. And thank you for having me here today. I'm going to go ahead and share my screen. All right. Can you guys see my screen?
Yep. That looks perfect.
Okay. Wonderful. All right. So today we'll talk about Airbnb. And when people first hear of Airbnb, they start thinking of like an apartment or an extra room, spare room somewhere that somebody's sharing to make additional income. But over the years, Airbnb has evolved so much. And so here we are today with a great business opportunity for a lot of us. So let's talk about it. Let's talk about, Airbnb, vacation rentals, and why we should do more of them. I'm going to start using the term short-term rental. And for those of you who don't, let's clarify what short-term rentals are. So short-term rentals are anything that less than a year. So they are rented out on a nightly basis instead of an annual lease that we normally used to. So for this purpose, I'm going to start calling the short-term rental, or maybe I even say STR. And if you have any questions, just feel free to raise your hands or whatnot, and Derek and I will get to them. And before we go on, I'd like to give you guys a little bit introductions about myself. So who is V. Lee? And thank you, Derek, for introducing me. I'll let the audience get a little bit more intimate. So this is V. Lee before real estate. I used to live life on the fast lane, as you can see. I came to the US in 95. McDonald's wouldn't hire me because I couldn't speak English at that time. Long story short, I did get me 2 jobs later, working through high school, college. I was always a hard worker. Then at the age of 25, my mom did not appreciate my lifestyle of working 2 jobs and living a life. So she said, I'm buying a business, we're gonna run it. So then I became a business owner overnight. So when I became a mom, it changed my life and it changed my perspective because I was working 24/7. So then I started looking around, see what else I can do to better my life and better our future. And that's how I got into real estate. So here I am today in real estate. I flip over 200 houses. I own about 20 rentals. What development agents for HomeVestor means is that I help new franchisee. I help them to recruit new franchisee, and I also help to train them in the business to become, more profitable or successful offices. I founded the RE Ballers, and that's an online community for real estate investors. And lastly, not like I didn't have enough to do, I'm always looking for something more and better and how we can help other people better. And that's how I founded Buzz Vacation Rentals. And we are a short-term vacation rental managers. All right, so let's talk about why you are here. Why would you consider short-term rentals? Well, just so you know, short-term rental is a huge industry. If you didn't know it already, it's a $113.9 billion industry. That's the predictions by 2027. So as you can see that, as big as it is, we all want a piece of it, right? Because we are an investor, and we're always looking for ways to maximize our profit, ways to different exit strategy so that we can get more. And I'll tell you that this industry is forever changing because, and I'm not saying that this to be insensitive. I know a lot of people got hurt through COVID and all, but it's sort of a blessing in the sky for our industry, for the short-term rental, because people, the amenities that were provided by the hotels and whatnot, some are no longer available. And people somewhat geared towards the home environment now instead of, staying at the hotel. So our industry is just going to get bigger from here. And it has been proven because we look at all the occupancy and all the revenue throughout the industry. While hotels were going down, the short-term rental were going up. All right, so I thought the best way to start you is to talk about some case study. And these are real example of our homes that we have in our program. So let's go to case study number 1. And this is an illustrations. We use example from our own program. This home is called the Legends. It has a market value of $525,000. It's a 5-bedroom, 3-bath, but we decided to only furnish 4-bedroom, so that way it's not, turning into a fraternity house or a party house. We try to control the number of people that we want to have in the home. So it accommodates 8 to 10, meaning that there's sleeping arrangement for 8 to 10 people. And the idea here is that we wanted to provide the luxury experience for the guests. All right, so first, the case study here is the long-term rental. So if we were to rent this house on a long-term, meaning we advertise it, we sign a lease, a 1 year, 2 years, or 3-year lease with a tenant. So let's look at some numbers and see what we get, okay? All right, so the loan balance on this property is $309. Monthly PITI is $2,991. So if we were to rent it out on the long-term market, sign a year lease with, a tenant would rent at $2,900 a month. That's the market rent. So that put us at a deficit of $91. You guys with me so far? All right. So we said, let's do this. Let's furnish this home. And try it short term and see what it does. So I'm about to go over to the short-term experience, and it's going to blow your mind. So here is what we would do short-term, meaning we furnish it, we get it ready, and then we rent it out on a nightly basis. Okay, so we got to furnish the home, as you know, just like a full kitchen, bedroom, bathroom, everything. Okay, you got to add in utility. And then for this, you got to have expenses like internet and then stream TV. You got to provide additional insurance costs. Sorry, not you. In order to be more protected, you got to have additional insurance costs for liability compared to your normal long-term rental. So we add all the costs up. It costs us at $3,621. Well, this home so happened to rent out at an average nightly rate of $289. And if you don't know what average nightly rate is we take it out over the year. We average it out over the year, and it's averaged to be $289. Sometimes it's higher, sometimes it could be less. And the occupancy for this home annually is 65%. So out of 365 nights in a year, it will rent out at, somebody help me with the math. Sorry, 365 times 65. So it ran out at about 237 nights a year. So that grows us at $5,635. After we pay property management fee, we net $4,226. So remember, we were at a deficit of $91. monthly. Now we at a positive cash flow of 605 monthly. And this is a big home. So annual cash flow of 7,260.
B, quick question for you,
Yep.
just because we're getting a couple of these coming from the audience.
Yep.
When you talk about the management fee and stuff, does that include like the cleaning service fee, you know, like for the maid to come in after like they leave and stuff? Is that counted in there?
Good question. So the cleaning fees are normally passed on to the guests. So we don't charge the homeowners, or you're not paying for it.
Perfect.
Property owners do not pay for the cleaning fee if they done it right. Okay.
Perfect.
So you guys liking this so far?
Yes, keep it coming.
Okay.
I'll be doing the math too with you.
All right. So this is a big home, right? I mean, if you were to rent it out long term, it just won't make sense. But this is one where you may not be able to sell it for whatever reason. It sit on the market for longer. Now, the play here, though, also is this home will appreciate a lot over the years. Okay. All right. Let's go to the next case study. So the next case study, this home is smaller for private Oasis. It's a 3-bedroom, 1.5 bath, and it's about 1,100 square feet, you know, small. So we put 6 to 8 people here. All right. And this home does have a swimming pool. It was rented out long-term to tenants. Same scenario. So monthly PITI for this home is $1,424. It has a pool, so we pay for the pool maintenance just to make sure that the pool get taken care of, you know, and not being neglected or whatnot. So then our monthly cost in a long-term rental, and this was a 2 years lease, the monthly cost was $1,579. It was rented for $1,650 a month. So cash flow at $71 a month. So for these example, I made a lot of assumptions like interest rate, and this is on a 30 years note, and this and that. All right, so that put us at an annual cash flow of $865. Not bad, right? Because this home is appreciating. Also, it's I believe over the course of 5 years, it has already appreciated, I don't know, 30–40%, maybe more. All right, so when the long-term tenant moved out, we said, let's take this and let's do it short-term. So this is what is done short-term. You guys want to take a guess to see how much it made or how much it cash flow a year?
Well, the last one was $7,000. Is this one going to be more? Is it going to be like 10?
Good guess. So let's see. So $8,091 annual cash flow. So let's go over some numbers. So this is a smaller home. So obviously it costs less to furnish. So it costs $7,000 to furnish. And then we got the utility and the pool maintenance. So that's at $425. Internet and stream TV cost the same, whether it's a bigger home or smaller home. And additional liability insurance costs $71 a month. So you add all that up, your cost is at $1,770 a month. So this smaller home has an average nightly rate of $155. It does have a higher occupancy rate because it's a smaller home. So our monthly rent revenue is $3,259. After we pay management fee, then the net is $2,444. Okay, so that put us as a monthly cash flow of $674. This is after utilities, PITI paid. And that's how we got an annual cash flow of $8,091. I think I got some questions where you guys are asking, where are these homes located? These homes are in Houston. Okay.
There's a couple other questions too about it. Can I just read them off to you?
Yeah, sure.
Sure. So one of the big things is, how are you determining the nightly rental rates, or like the nightly rate on the Airbnbs?
That's $1 million question. That is how we are different than other people. That's something that we can cover down the line. However, briefly, the nightly rate, Airbnb will give you suggestions on what you should charge nightly. However, Airbnb is known to set the rate real low because, they don't make money if the home is not rented. So they want to set the rate low and get the occupancy really high because it's all about volume for them.
I know it's not really directly related to this case study, but one question popped up from a few different people is about insurance. Because it's a short-term rental, are you running into issues with having longer, like a more expensive insurance rates and stuff?
Yes, your insurance is a little bit higher. When it come down to it, you got your builder risk, or because you got vacancy.
Sure.
And then you got liability when your guests are there.
Okay.
So yes, it does cost a little bit extra if you want to do it right and want to have your additional protections through your insurance, your liability.
Perfect.
But whenever we talk about insurance, there's two different things though. There's a damage insurance for damage to your furniture, to the home, and there's liability insurance. Okay, so we can touch on that as we go on.
Okay, no worries. I'll let you keep going.
Okay, so here's the case study. So far, so good. So let's talk about the benefits, right, of why you would want to have short-term rentals. So the obvious benefit that we saw in the example, the case study that I used, the cash flow. Up to $1,000 per month, more than long-term rental. The other benefits are your homes are better cared for. And so after each of the guests, after each stay, the home are being cleaned professionally. So if there's any error, any mistake, any damage, you normally can catch it right away. Versus if you were doing it long term, sometimes your tenants decide not to tell you about a plumbing leak until, when they move out. That's when you discover, and that's when you will have more damage. Okay. Another benefit is no evictions. Wouldn't you love that right now? So all of our guests pay for the entire stay upfront. We had guests that actually booked for mid-length stay, and that is a month, 2 months, 3 months, and we collect the money, all the money upfront. I also often hear people complain about their tenants. Like I have one, for example, I thought they were going to be great tenants, 800 credit score and all, but they turn out to be my most pain in the rear tenants. They complain about everything. In this example, and I mean, for short term, you don't like them. New ones are coming the following weekend. So those are some of the obvious benefit that you can see, and there's more, because we have the numbers, and we also have the intangible. So what are some of those? Place to host a gathering. So if you have short-term rental and you need to have a poker night or whatnot, and you don't want to do it in your own home because you don't want to have to clean up, well, you can use your short-term rental home for it, right? And have the maid to clean it instead of you. Another benefit is you'll get away. You can take your family or friends or whatever, or you just need to get away from your spouse or whoever for one night. or 2 nights, it's your quick getaway. And bragging rights. It makes for a good story on the bar stool or at the happy hour. So there's another subject that I want to touch on briefly as well with short-term rental, and you guys probably have heard of it or not heard of it from all these Airbnb gurus and whatnot. Is the term called rental arbitrage. Let me explain what this means. So rental, it means I go in and I say, Mr. Landlord, I want to sign a lease with you. I'm going to sign a 2-year lease with you. And I'm going to do all the maintenance and all, repairs and whatnot. I'll improve your home condition too. And then I'm going to sublease them. So this provides a way for a lot of guys to actually rise over the years, through Airbnb, is because they don't have to have good credit to buy a home, right? They don't have to have that down payment cost and whatnot. So it's provide a lower barrier of entry for investors to leverage other people's homes to build wealth. So this is what it was really popular until 2020 when the pandemic hit, because a lot of people ended up over leveraging, and when Airbnb canceled all reservations and they did not have the funds set aside to pay for these properties, they went under. A really big company actually went under as well for doing this model. So this is a good model if you know how to work it and if you know what you're doing. Any questions on this?
We have some other questions, but I'm kind of saving them for near the end so you can kind of keep going. But okay. You're doing great. Keep it up.
All right, great. So we'll talk about all the benefits. Let's talk about some downfall. What if you show up and your house look like this, right? So let's talk about where the train run off the track, or what happened. So how you fail in this business is when you get a lot of bad reviews, and you will have people that just won't give you good reviews, period, no matter what you do. You also got the freeloader, the scam, the con artists who figure out how to come and stay and not have to pay for it. You have guest damage homes or steal items from home. And then the big thing is the cancellation. The cancellations that when COVID, I talked about it earlier, when the government decided to shut down the country, I believe it was March, and Airbnb decided to cancel all reservation and did not pay any of the hosts at all. They upset many hosts for that, because everyone has different cancellation policy. So you have to have things in place to deal with cancellations, step, process, procedure, whatever you need, or insurance even, to protect yourself in case of cancellation. And then there's unauthorized parties or event, and this happened a lot because people, that's what Airbnb is known for, to kind of book an Airbnb and let's have a party. Some other downfalls are chargeback. Chargebacks are really bad because they come, they stay, and then several months later, you get a letter or an email from your credit card processor about, this charge was unauthorized or whatnot.
Okay, but they're on the shared drive part.
Hey guys, I don't know who that is, but can you mute yourself? Sorry about that.
It's okay.
And hey, Charles, can you go ahead and mute everybody except for V and myself?
All right.
Please continue, V. Sorry.
Quite all right. And one of your questions earlier about insurance, underinsured, I'll give you an example. This lady or this group booked a home and came and stayed, And there was a lady, elderly lady. Instead of walking on the sidewalk, she decided to take a detour, take a shortcut and cut through the yard. And so happened there was a piece of something, a debris in the yard, and she tripped and fell. So she sued the management company and the homeowners. And this lady was in her 60s, 70s. Basically not a working, she was in her retire age. And when she sued the company, she was suing them for, of course, damages, and that she no longer can work to support her family and this and that. So this is where your liability insurance will come in and save you. So it's very important to make sure that you are not underinsured. And then poor management. When you hire or decide to manage yourself or hire somebody to manage your property for you, if it's not done properly, your home won't get booked, or if it underutilized or whatnot, it won't generate the revenue that you need it to. The same with low occupancy and rate too low or rate too high. If your rate is too low, that means you're not making the most money, right? Your home is constantly occupied, but you're not making the most money. And when your rate is too high, you don't get any booking, you're not making money either. All right, so all of this wonderful thing, you saw the ups and you saw the downs, the good and the bad, and now you say, V, I'm ready. I want to go and buy my short-term rental, or I have a vacant home and I think I can convert it to short-term rental. So let's talk about, if that's what you want to do, let's talk about what other things that you should know, should consider, if this is the right thing to do or not. So these are the 5 things that you need to consider, and I'm going to break it down and go into each of those items to explain further. So let's talk about local law and regulations. Now, there are some area that you are not allowed to do short-term rental at all. So before you decide to convert your home into a short-term rental, you got to check your local law and regulations. Some of the HOAs gotten smarter over the year. So what they've done is change here's the thing, Airbnb is considered, if anyone tell you it is a business, they are wrong. It is not a business. It is a residential activity. These are residential leases. They just have shorter term. So just make sure you get that part right. It's not running a business. It's they are residential leases, because these people renting your home to do residential activities. Okay, they come, they eat, they sleep, they eat. They do residential activity. So therefore, the state, they consider these are short-term leases, or residential leases with shorter term. So there, for the nerdy, those who like to read, look up Tar versus Timberwood Park Owner Associations. This is a case in San Antonio, and the homeowner won the case. The HOA was fining the homeowner for renting his home out on Airbnb, and he took it to the Supreme Court and he won. All right, so next we want to look at true costs. I think with probably some questions about costs. Like, what are all the costs? So if you were to buy an investment property, these are your standard costs: your down payment, closing costs, monthly mortgage, mortgage payment and whatnot. And then if you decide to rent it out short term, you have to furnish your home, so you incur furnishing costs, utility, additional insurance, supplies for guests, management fee. So you got to factor all of these costs into your numbers to see if it makes sense for you to rent it out short term versus long term, or not to hold it at all, right? And often I find that many people don't include all the costs. So next thing you want to consider is, do you self-manage or do you hire a management company? Do you love this? Do you love, if you're sitting on the couch on Sunday afternoon watching Tom Brady, I'm sorry, playing football, and you got a message from your guest saying the AC is not working, or the heat's not working, are you willing to get up and go get it fixed? So that's something that you need to ask yourself, if this is your style, if you have the time to manage, or the resources, or is this something that you can hire somebody else to do? And I'm aware that management company costs more, but is it worth your time? That's the question that you need to decide for yourself. The next thing that you need to consider is, how will you market it? So I put a few of the listing site here just so you have an idea. There's so many of them. The popular one that we know, right? And then there's so many other niche one that we don't know about. Like, for example, Mr. B&B. And then you have with some house trip. So you got these little one that's very niche-y. So how do you decide where to list? So I'm gonna show you a comparison chart of which site is the best. So here's a little chart that I kind of put together. Just a short, quick comparison of the different sites. So this is Airbnb. And when we talk about site comparisons, of course, we want to see, how many visitors come to the site, how well they, how big they are, and what are the fees that they charge us, and what are the fees that they charge the guests. So if you guys are looking at this, it seems like, we should list our home on booking.com because they have the most visitors, right? But what you don't know is booking.com has a lot of there's a lot of scammers that will go on booking.com and book the reservations, and you, the homeowner, ended up with the damage. Give me 1 second, please.
Gotta love the kids.
Yes. My daughter went into the room and she forgot to close the door. So, so most of us know about Airbnb. And I think probably a good portion know about HomeAway and Vrbo. Now, HomeAway and Vrbo, they merged, and they actually recently was acquired by Expedia. So now when you list your home on these sites, also go on Expedia as well. So that's a plus. You got TripAdvisor and Flipkey and Booking.com. So these are probably the 4 top one that most people know about. Okay, so let's, I'm gonna go on to the next one and talk about Airbnb. So should you list on Airbnb, right? The pros. So it's always, the question I always ask is, what are my benefits? And, what's the other side, the flip side, the downside? So Airbnb, most people know about it. It's easy to get your home listed. The merchant of records, meaning they collect all the payments. So you don't have to worry about that handling payments. You don't have to worry about the chargeback. You don't have to, to get payment process in place. You can just go online, go on Airbnb and start listing, and there you are. Okay. And then what they have is called host guarantee and host protection. So they advertise this heavily to the host as a protection, that if the host guarantee is for damage and the host protection is for liability. So if the guests get hurt or whatnot, or if the guests damage your home, you are entitled up to $1 million in claim. Okay, so it sounds all good, right? Sounds wonderful. Like we all should go list our home on Airbnb. But here's the catch. So when you list your home on Airbnb, right now they charge the host 3%, and I believe they charge the guest 9%. Eventually, they will change that. There's several talk that they will change the fee to, they will no longer charge the guest a fee, and they will pass all the fees on to the host. So just so you know, they dictate the rules. So they say, yeah, we're gonna cover you for up to $1 million, but good luck getting it. Or if some guests call in, if some guests, another example is if you have a strict cancellation policy, that means if they cancel within 30 days of arrival, they won't get any refund. But you know, they'll call Airbnb and cry or whatnot, and depend on who you get as the rep, you know, they might decide that to take the guest side. And it happened quite often that they side with the guest and rule in favor of the guest, regardless of your policy. They also have a bad reputation for partiers, and they control your money. This is the part that I like the least, because normally when the guests book your home and all the other media of listing site or whatnot, you get paid at the time of booking. The guests have to pay you at the time of booking, and you get that money. On Airbnb, they hold that money and they don't give it to you until 24 hours after the guests have checked in. So think about that for a moment. How risky is it, right? And here's another one. This is, they control your business. So if they decide one day, you wake up one day and look at your account and it's inactive, that means all your listings get turned off. You no longer get reservations, no longer get money. Can you see how much power they have over your business? I mean, I worked so hard to put my home on their sites to help them make money, but here they are, they have that much power to turn my business off at any point. It makes me upset just to talk about it. All right. So lastly, let's talk about why you should consider a management company instead of doing it on your own. And more precisely, why should you consider bus vacation rentals? Well, for several reasons. I come from the investing side, so I understand the numbers. But more than that, we use the #1 leading software in vacation rental. We use Streamline. They're very good. They got all the bells and whistles to do a lot of things. We have a whole team and system to handle everything, meaning we will take all the calls, we'll deal with all the angry guests, we'll deal with all the damages, all the problems. And we are expert in revenue management. A question that Derek asked earlier was, how do we determine the rates? This is something we do daily. We'll go in, we look at supply, demand. You know, do we raise the rate? Do we drop the rates? How do we get the most? And this is something that we do daily. And then we market our homes on several sites. And it's a lot of work to keep track of, you know, the different sites, because each of them work differently. And this is something that not every management company do. We screen the guests. We make sure that they are, you know, we look at criminal records. We look at if they had, if they were flagged for damaging other people's home in the past. So we look at all of these things before we accept the guest. And that's where we conclude my presentation today. So thank you for tuning in.
Yeah.
So now we open up the floor for questions.
Yeah, so keep that screen up just for a minute, V. right? Just so people can get your contact info and stuff like that while we're talking. So
Did
a
I
lot
do
of,
that scratchy thing there? The red line?
yeah. So,
How did I do that?
so, if you click up top on view options and there's an annotate button and you'll see an eraser.
Oh.
At some point you're like, there you go. Boop.
Oh, okay. Okay, there it is.
So as we kind of talk about some of these things, right, there was a lot of questions that came in from finding the right properties. Is there a way to be passive investors to some of the taxes that may apply and these type of things? So there is a lot of things that are coming up. So guys, if you want to talk to Bea directly, make sure you get her phone number and her email right there below, okay? So I'm going to kind of skim through some of these so we can try to tackle as many as we can, okay? But the first thing that I wanted to touch on is HOAs, right? Is it difficult to get one of these rental properties, something like that, in a high HOA areas, or these short-term rentals?
So for HOA, good question. That's a wonderful question. For HOA, I find that if you are in a large HOA, meaning there's more than X number of homes, if there's a few hundred homes in that HOA, it's harder for the HOA to change any rules because they have to have enough votes. So I had an example where I had a home and I rented it out short term and there was only 30 units in that HOA. So they did change the HOA bylaw. Could I take them to court? Yes. However, it's a business decision.
Sure.
So I did not. But we're happy to look at HOA bylaws and whatnot to see the language, because many language is very ambiguous. Unless they state specifically that we do not allow leases of less than X number of days. If that is not in your HOA bylaw, you probably have the right to rent them out short term.
No worries. So what about some of the stuff inside the house, like the couches, the TV, the beds? How often would you say you have to replace some of these? Like, is it on a yearly basis, a bi-yearly, what would you think is a reasonable expectation on having to replace and refurnish everything in the any Airbnb?
It depends on what you buy. Okay. If you went and buy IKEA furniture, you probably want to replace them more quickly.
Good answer.
If you buy, hotel quality furniture, you probably can get a good 4 or 5 years out of them.
There's a guy on here by the name of Mike. Mike, when it talks about, you asked, how is this taxed? This all depends on how you do it. Okay. Hypothetically, if you're using some sort of small business, like an entity that maybe you pay yourself Schedule C income from, it'll be taxed one way. If you're using an IRA, it'll be taxed a different way, et cetera. So really only a CPA should answer that, but it all depends on how you structure your investment will determine on how the profit gets taxed, if any. So good question.
Yeah, let me touch on that a little bit too, though. There's different kind of tax. You got your income tax, which, the 1098. And then if you refer to hotel tax, because now on the short-term leases, you're subject to hotel taxes. Those the company, Buzz Vacation Rental, will remit and submit on the owner's behalf.
Perfect. Okay. Now, as far as being a passive investor, a lot of people that work with us like to be passive. They don't want to have to deal with the tenants and the toilets and trying to consistently rent it out and stuff. Is there a way they can be truly passive in this area to where they don't have to deal with any of that stuff, where they just
absolutely? That's why they should partner with us, and that's what we hear. All they need is to identify the property, own the property, of course, and then we partner with interior designer to help them in that process. And once the home is ready, furnished and ready, then we take it from there. They can choose to be involved where they want to hear about every maintenance call, or they can choose not to be involved and just get their deposit at the end of every month, on the 10th of every month.
When we talk then back to, like your services, which this relates right back to it, right? What Buzz Vacation Rentals can do, is it geographically restricted? Can you guys do stuff all over the country?
that's our goal for the future. For the
Perfect.
time being, we are in Houston, Galveston, and anything in between.
I know
We
Galveston's a huge
expanding-
Airbnb
Yes, we
area.
also expand into Spring and Woodlands and Katy.
Okay. So you're expanding pretty quick then.
Yes.
Awesome.
And we have
Awesome.
the operation, the staff, the people in place.
So when we talk about the kind of the one of the final questions we're going to kind of go touch on before we kind of end everything up is budgets, right?
Yeah.
What is the biggest budget issue that you seem to run into, whether it is replacing furniture, maybe HOA things? Is there some sort of big budget thing that seems to come up consistently that is hard to budget for? I don't want to say hard to budget for, but just, what is the most common thing?
Not that I can think of, it's if you go into the home and prepare it with the mindset of, I want to make this the best, or the best home so that I don't have to deal with maintenance for quite some time.
Mm-hmm.
And you prepare your home in such a way, like, the big expenses you got in the home would be what the property itself, right? AC, roof, those kind of things. And that's
Right.
just regardless of whether you short-term or long-term, you have those expenses. The furniture expenses, it's not like you swap out the whole furniture every so many years. It's the first time where you got to furnish the home. That's probably your most expensive cost to get the home ready for short term. And then once you furnish, we'll replace things as needed. So it's not like one big expense. And every now and then you may, a guest might break a bed or break a couch, and you have insurance to cover that.
Okay. So, V, before we kind of wrap things up and stuff, I want to let everyone out there know, please reach out to her. She's very easily accessible. Quest has worked with V for several years, along with some of her other partners that she may be working with. So feel free to email her, reach out to her, give her a call so she can help you out. V, did you want to say anything to kind of end the call up and wrap everything in a nice, neat little bow?
Well, thank you, everyone. And I will tell you this, that all of our homes are booked now. So if you have vacant homes, I'm sorry to do a little plug, but if you have vacant homes, we need to talk. Yeah, we need to talk to see how we can make you more money.
I like it. So if you need anything from Quest, please give us a call at 855-FUN-IRAs. Don't forget, this whole thing was recorded, so you can go back and rewatch it. You can send me an email if you want to get it or rewatch the slides. And then V, last thing, are you willing to share your slides? A couple of people were asking if they could grab it from you.
Yeah, I think so. Yeah.
Sure. So if you guys do want the slides, just email V directly, let her, work with you and reach out. And we're going to go ahead and just kind of end everything coming up. So V, thank you again for, being on our weekly classes. And I hope we can get back to normal. I hope I can see you soon.
Yes.
Right? And so I'll see you around.
All right. Well, thank you so much. Thanks for having me.
Yeah, you too. Bye, V.
Bye-bye.